Hey guys, welcome to this lesson on seasonals. Today we're going to be talking about seasonals, and we are going to discuss the importance of seasonals in higher time frame fundamental analysis. Now, just like open interest and commitment of traders report, seasonal tendency is also important in terms of long-term macro analysis, and also in terms of identifying quarterly shifts in price. Okay, so quarterly shifts usually are intermediate term price swings. So price swings or price directional premise on an intermediate term, we can discern that from intermarket analysis, which we discussed on the previous video, commitment of traders report, open interest hedging program, okay, sorry, COT hedging program, and then open interest, and also looking at the interest rate markets, which we've talked about, and also blending that with seasonals. If you can get a confirmation of multiple of this, usually they would align, and around every 3 or 4 months you get them aligning. And when you couple that with seasonals, they are a very strong confluence in terms of market direction and market prognostication, and they can really aid in terms of understanding higher time frame direction bias for, we're talking about several weeks to months. Okay, so what I'm going to do on this lesson is I'll show you, it's not going to be as lengthy as the other ones, right? It's going to be a short one because there really is nothing complex about this topic. It's just really a straightforward topic, but I'm going to show you how you can use that to add to your arsenal in terms of identifying high probability daily order flow or high probability daily delivers. Now, the first thing we need to understand is that seasonal tendency is not the be all end all in terms of your trading. Okay, again, like I talk about with SMT in price, it's not something that you go into the marketplace just going in and that's the only sole tool you're using to try to forecast the market. Okay, a lot of times price will move in alignment with the seasonals, but it's also going to be many times where it does not. And if you are using seasonal tendencies as your be all end all when it comes to higher time frame trading, or when it comes to intermediate term price swings, essentially you're handicapping yourself, because there's going to be a lot of times where price does not go in sync with your seasonals, and you can use a lot of tools to identify that. But this lesson is an introduction into seasonals, and later on down the line, it's going to be a lot more complex topic and these things. Now, what we want to do with seasonals is we want to pair strong seasonals against weak seasonals. So just the same way we use relative strength. When we are using relative strength in price, what we like to look for is in an asset or a currency. Since we trade currencies, we like to look for an asset or a currency that is poised to displace higher in price, which indicates bullish relative strength. And we want to look for an asset that's poised to trade lower in price, which is bearish relative strength, and we pair them up together, and that creates highly volatile asset. So let's use this as an example. So if we have dollar poised to trade really, really bullish, so we have the XY poised to trade really bullish, and then we have, let's say, Canadian dollar poised to trade really bearish. That will create a very one-sided market condition for dollar CAD. So that would mean that USD CAD should see extreme bullishness, because we have USD being the base pair, extremely bullish, and Canadian dollar being the co-pair, extremely bearish. So that will create a very one-sided condition. Okay, and this leads to usually what I call mega trades, but that's for a later topic. Okay, but it creates a very strong daily order flow, especially if you're doing this analysis. Again, you can do it on any time frame, but if you're doing this analysis on daily time frame, it creates a very strong daily order flow, and you can see a very massive one-sided displacement on USD CAD by pairing an asset that is extremely bullish or under institutional accumulation versus an asset that is extremely weak or under institutional distribution price. So now with seasonal simply is showing, all it indicates is historic price action. Okay, what price has been doing over a period of time. Usually it is repetitive, and they're usually factors outside our control. Okay, it's not factors that you and I know of. You cannot know the underlying factors. Now I know I said interest rate makes the entire global market go round, but also the question is why is it that during certain seasons of the year the market does a certain thing or an asset does a certain thing? There has to be an underlying factor behind this, okay, which we don't know, but we can discern that in price. Okay, so price over a period of time shows that seasonally it has a specific direction. And what we use that information to do is we understand that it creates a tendency for an asset to act a specific way. Now, it does not necessarily need to act that specific way every single time. Okay, but all we're anticipating is we're anticipating technicals to give us a hint that it wants to align with seasonals. And where we can get that alignment in terms of technicals aligning with seasonals, that creates a very, very strong high probability market condition. So we can identify certain asset classes or certain markets which have a strong seasonal tendency to move 3 to 4 months every single year. And all we need to do is we need to go and look at the historic data on each asset class to see what it does or what it's been doing over a period of time, and that gives a clue as to what these pairs are doing. So let's just recap what a seasonal tendency is. From the word seasonal, so let me type this out so you understand what we're talking about on today's lesson. Seasonal tendency. Okay, this is the word. Seasonal meaning a specific season. How long is a season? Well, there are 4 main seasons, right? I think we have the summer, winter, fall, and I think the last one's autumn or so. Okay, so we have 4 main seasons. So if there are 12 months in the year, we have 4 main seasons. That essentially breaks each season into a period of 3 months. Okay? So a seasonal tendency means every 3 to 4 months. Now, what is special about that 3 to 4 months? Remember the lesson we did on quarterly shifts? This is what seasonal tendency helps you do. It helps you identify quarterly shifts in an asset class. So usually during a specific season in a specific asset class, there's a very strong tendency for that asset class to behave a certain way. And we can identify that by looking at historic data accumulated over the years, over a decade or more, on that specific asset class, so we can see the recurring or repetitive delivery at each specific season. Now, that does not mean every quarter or every 3 or 4 months there's a very clear distinctive order flow on every asset. All we're saying is we're looking for on our seasonal chart, which I'll tell you where you can get them from. We're looking for seasons where there's a very strong displacement, and we compare them up against another asset where there's a strong displacement counter to the first asset we're comparing against, that we can use that to create a very strong confirmation for our quarterly shifts. So what we want to do with seasonal tendency is we want to pair up a very strong seasonal tendency against a very weak seasonal tendency, just like in the example of the relative strength. And what I have here is the recent price action on dollar CAD from the month of April, I think. From the month of April from the month of March going into April. Now, if you go back and watch the commentaries, again, the live commentaries, if you go back and watch the live commentaries, look at the portion where we talked about, the evening commentaries, not the live commentaries. Look at the portion where we talked about USD CAD. and how we talked about a reversal from this rejection block to the left, which is a premium array. So remember, one of our premium arrays is rejection block. So you can see the market creates a short-term high here, runs above that high, okay, where it's just going to be pending buy sub liquidity. You can see massive displacement to the downside, and then when it eventually returns back up into that old high where we had initial trapped liquidity for buyers, you can see the rejection there and then the displacement on the downside. Now we're actually expecting the market to try to get down into this low, but you can see it did not actually. It failed to get down to the low, and what it was trading down into, if you look at price closely, we have all of the displacement originated from this swing low down here, and it was simply returning down into a bullish order block prior to this displacement higher. And I personally think we're gunning for these eyes up here, and I will explain why. But we're not supposed to do forecasts on the course videos, but I decided to add that this time on the course videos, and you can see the precision on all the forecasts in terms of our time frame prognostication. Okay, so if we're going to look at seasonal tendency, so this is US dollar seasonal tendency. Now this is between the year of 1985 to 2017, so this is a little bit not up to date. Okay, it is I think it's about 5 years, almost 6 years, okay, behind. So if you want to get the current data, because there's no way you can get the PDF. Before you could get the PDF, but now just no PDF. So if you want to get the current data, go to mrci.com, okay, which is More Research Center Inc.com, and there you're gonna get all the catalog for every asset class. So every asset class ranging from currencies to commodities to every commodity group to interest rate and treasuries to equities. You get every seasonals right there. Especially if you're trading commodities. So if you're a person who trades commodities like gold and oil, okay, it's a very good tool, because commodities, out of all the other assets, commodities tend to follow seasonal tendencies really, really well. Especially when you get into like the grain section of commodities and the cattle section of commodities. It's like a cheat code. Okay, but I don't trade commodities. I only trade currencies. I don't trade even equities. So I don't necessarily use them, but they're still very, 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 very good as a tool for identifying quarterly shifts by just studying the seasonal influence over a period of time. So you can see here on my this chart here, this is 30. It's a 33-year seasonal. So that's between 1985 on dollar to 2017. Now you can see typically around the month of March. Now you might look at this and say, but well, we rallied between. We can see a bull seasonal between the month of January to February, but it's not a strong seasonal. Why is it not a strong seasonal? Because you can see. Sorry if I'm stammering. Because you can see that in a 5-year time period, okay, or a 5-year pattern, while the 33-year pattern shows a little bit of consolidation, then towards the end of February you see massive displacement to the upside. On the 5-year, it's not showing that. It's not showing that slightly bullish consolidation. It's actually showing weakness. On the 15-year, it's also showing neutrality. So we're not interested in seasonals between the month of January to February, because it's not a really strong confirmation, because we're not seeing extreme one-sidedness, which is what we're looking for. Okay, so if we're looking for seasonal, remember we want to pair, ideally, an ideal seasonal is want to pair asset classes that are oppositely correlated. Okay, I want to use that as a confluence tool for our quarterly shifts. Now, between the month of March going into April, there's a very strong seasonal for dollar to make a high. Okay, a little bit after the start of March, there's a very strong seasonal for dollar to make a high, and then see massive displacement going into the end of April. So that's a very strong seasonal. There's also a very strong seasonal for bearishness during the month of July, where dollar makes another long-term high or intermediate-term high or quarterly shifts and sees displacement going to August/September. And then towards the later portion of the year, there's a very strong signal for dollars to see extreme bullishness. Okay, but now what we're interested in is we're interested in the recent price action, and here you can see there's a very strong signal for dollars to make a high around the month of March and see decline going into the month of April. Now, if we looked at Canadian dollar, there's a very strong seasonal for Canadian dollars to see a low form during the month of March going into April. So now let's go back and look at dollar. It's a very strong signal for dollar to make a high and see massive displacement on the downside going to the end of April. Then just also a very strong signal for Canadian dollars to see a low and make a very strong bullish delivery on the upside going into the end of April. So what we have here is we have extreme willingness on a quarterly shift basis for weakness on dollar from our seasonals. Okay, let's get rid of this. So we have USD here, seasonal tendency chart. Then we have Canadian dollar, which is CAD here, which is Canadian dollar chart. You can see just a very strong signal for dollar to make a high around early March and be bearish going into end of April. Then just also a very strong signal for Canadian dollar to make a low during early March and make a very bullish signal going to end of April. So what we have right there is if we blended the both of them into a pair, that's weak dollar, very strong Canadian dollar. For seasonals, this is what we call an ideal seasonal. Okay, an ideal seasonal is a seasonal where we blend a seasonal period for an asset to see massive displacement on one side versus another asset that is correlated to that asset to see massive displacement on the other side, and that creates a very strong quarterly shift, especially if it aligns with technicals. So we're going to say this in actual price action. So between early March, so this is the start of March and this is the end of April. So between early March going into the later portion of April, there's a very strong seasonal for dollar to be weak and Canadian dollar to be bullish. Now around this time we saw price expand up above back into this old rejection block up here, okay, where we have previous buys liquidity, and that was inside an old fair value gap to the left. But we're not really interested in this because what we're more concerned with is the trap liquidity up here. So you can see price trades up there, up into the eye there. Now if it's gonna run for buys liquidity, which is reversing above the highest high in this range, right, it should not be returning back down here. Why? Because that's what retail would consider as resistance turn support. Okay, and you can see on the daily time frame, if you remember our lesson on market maker traps, we talked about false flags. Okay, so you can see here a retail narrative here playing on daily time frame. So you can see here that retail considers this as resistance, which has now become support, and this is a bull flag. Actually, that's just a black line. Okay, that's a bullish flagpole, and remember what you're looking for. You're looking to buy the breakout or retest of the bullish flagpole. That's what retail is looking for. So you can see we had initial fake out. Okay, not a breakout, it's a fake out because it sucks in retail longs and creates counterpart liquidity on the sell side if the market wants to actually reach for a deeper discount, which is this bullish order block. Now at the time this is happening, as price run out of that false flag, you can see we are returning back up into a bearish order block up here. Now let's see if we can confirm that with interest rates. Okay, so if we are seeing weakness, or if we're anticipating weakness on dollar, what should the interest rate market be doing? Should it be rallying strongly, or should it be consolidating, neutral, or bearish? We want to see it be neutral to bearish. Okay, because if we see bearishness on the treasuries market, which is, this is 30 treasuries on dollar, if we see weakness on the 30 treasuries, what's that going to lead up into? That's going to make interest rate bullish. Now, if interest rate is bullish, that's going to mean dollar is bullish. So bullishness on the treasuries leads to bearishness in dollar. Bearishness on treasuries leads to bullishness in dollar. So if we're going to see dollar be weak, but want to see treasuries continue to either be neutral or rally. Okay? Because if treasuries are rallying, that will lead to interest rate declining, which means currencies are declining because investors are not really interested in lower rates. So it's just going to be a lesser demand for dollar to purchase the treasuries. Okay, so I want to rewind what I said last couple seconds so you really grasp what I just described. But again, I'm showing you that seasonals are a tool for confirmation of order flow, and not necessarily just to be used by itself to identify quarterly shifts. Okay, all it does is it creates an expectation. You know, during this period, there's a possibility that USD CAD should be weak because you have dollar being weak and Canadian dollar being very bullish. Now you're going into price looking for all those confirmations that aligns with seasonals. So all it's doing is it's putting into context quarterly shift for a period of time. And once you see order flow start to align with that sentiment, you've nailed it. So you already know what you're looking for every week. Tuesdays, Wednesdays, Thursdays, you're looking to sell short USD CAD. Okay, around London session or New York session or London close, that's what you're looking for. And you're constantly identifying lower targets, okay, at discount where distribution can come in the marketplace. So we have this here. We have the treasuries confirming with the bullishness that dollar CAD should be weak, and then let's see if we can get SMT on dollar, which is a correlated pair. So you can see we have a short to my here, another short to my here. Dollar was running lower, and USD CAD was running higher. Again, don't look at the wicks, look at the candle closes. So let me just show you real quick what I mean. Okay, let me make this a little bit thicker. Look at it. Look at this eye. All right, it's higher. So dollar's running lower, really running lower. This is higher. What does that mean? What have I taught you that means? That means professional distribution, meaning the institutions were selling short into the rally. Because if this was a legit rally for buy side, dollar should also be rallying, but it's not. So institutions were actually selling short into the rally, which aligned with this market maker trap, and you can see what happened next. As soon as we traded down through, short to my up here, which price runs above. This is the breaker block. Price trades lower, trades up into the breaker block, and starts aggressively displacing on the downside. It starts to sell short. Okay, price trades lower. Trades lower, trades up into bearish breaker. Displaces, creates inefficiency, confirming order flow. Continues to displace, major rebalance into mitigation block, displaces a little bit more, major rebalance into mitigation block again. Okay, trades through fair value gap, okay, indicating that there's no willingness in terms of price wanting to see bullish sentiment yet, and trades a little bit up and retraces back up into inverted level, which is ultra value gap, which has become resistance in price. And we actually shorted this. We actually went into price and shorted this from lower, and price starts to decline for the sell stops pressing down here, which is the bottom of the candle. Then eventually trades down into the bullish order block and sees displacement going into the end of April. Okay, and that's how you use seasonal tendencies to guide you in terms of anticipating a directional premise. Now, what you can see here is you can see during the month of May going into June on the 33-year seasonal, there's a very strong potential for dollar to rally going into June, July. On a 15-year pattern, there's a very strong tendency for dollar to rally from sort of May going into the end of the month, and also on the 5-year time period. Now, if we're seeing a very strong willingness in dollar to want to rally on one side, then we need to get a very strong willingness on Canadian dollar to rally opposite to dollar. So we want to see Canadian dollar make kind of like a short-term or intermediate-term high to then sell off, which would give us a very ideal seasonal. Okay, where we're pairing a very strong seasonal against a very weak seasonal. So let's look at Canadian dollar. And you can see around the start of May, there's a very strong seasonal on both the 40-year, 15-year, and also 5-year for Canadian dollar to decline going into the end of May. So that creates a very strong potential for one-sidedness. And you actually saw me trade this bullishness this week, or yeah, it's Sunday actually. So you actually saw me trade a bullishness last week in price, where I showed you how I was buying from the rejection block, and I give my buys on dollar being bullish. I can see the massive upside that's resumed in price. So I think personally we're gonna run above the short term high, and we're gonna be trading back up here going into the end of the month. That's what I think. So all we need to do is we need to trade out of this range, and we're possibly gonna see this. I'll cover that on the evening commentaries, by the way. But this is just a forecast for those of you guys watching the course months or probably even years down the line. And you want to go into your chart and see what your scat has done so far. So I'm going to cap up the video here, and I will see you on the next lesson. Have an awesome trading.